Howdy folks, in today's video we're going to talk about taxes in Canada. You know, lately a lot of people have been saying, there's a lot of talk about taxes and your taxes pay for everything, and Canada's got very high taxes, which is true. We do have a tax system that is charging quite a lot, but I actually decided what I needed to do is find out exactly how much. And then also my interest in it got spiked a little bit last week when I met a gentleman that was talking about taxes and how you can save taxes and what you can claim back. So I did a little bit of a deep dive into this whole thing, and I wanted to show you what I found. So just before we go any further, let me just make this very clear. I'm not a financial consultant. I'm not an accountant. I'm not a bookkeeper. I'm not a professional tax consultant. So do your own research. What I'm showing you right now is what I found online, and it's just my take on things, which I think is pretty close to right. But anyway. All right, so the first thing I need to say to you about the Canada taxes is that what we have is a progressive tax system. So in other words, there's levels in which your taxes go up. But it's not like a lot of people think. It's like, hey, a lot of people see it like, oh, shuck, I don't want to go into the next tax bracket because then I'm paying higher taxes on everything. It doesn't work like that. How the taxes work is that up to a certain level, you pay a certain amount. But if you go to the next level, only whatever is higher than that amount, you pay the higher tax on. You still pay the lower amount of tax on the previous layer. So in other words, it doesn't mean if, for argument's sake, the tax, when you make 10,000, the tax goes from 10% to 20%. So if you make 11,000, you pay 20% on the whole 11,000. No, it doesn't work like that. You still only pay 10% on the first 10,000 and 20% on the next 11,000. So it's actually fairly easy when you get to it. And then, of course, the other thing that I have to say here is I put together this spreadsheet to explain the taxes, and let me show you what it's all about. So firstly, we're going to talk about the income bracket. Now that is not your net income, that's your gross income that I'm showing over here. And the reason for that is, you know, there's just so much that you can deduct from there. Actually, it's kind of a little bit hybrid. It's hybrid between net and gross, but I'll explain that just now. Then you've got your federal taxes. In Canada, you pay federal and provincial taxes, personal income taxes. So federal taxes, provincial taxes, the total tax, so the combined of federal and provincial, the total amount that you will be paying, and then the effective rate. To get the effective rate, what I did is I take the total amount of taxes that you paid on the income, and I divided to get the actual effective rate of what we paid. So, and then the last column is how much money will you have left over after paying your taxes. So another thing I need to just explain while showing you this spreadsheet is I got these details straight from the federal income tax brackets. So that shows up over here. And then the personal income tax brackets that show up over here. Now you will notice that these start at 43,000, so 0 to 43,000, and this one starts at 49,000 or less. Yet on my spreadsheet, I have 11,000, 13,000, and 15,000. The reason I put those in there is that there are tax deductions or deductions that you can make from your personal income that everybody gets. So in other words, nobody's going to pay tax on those part of it. So how do I explain this? Okay, so basically what happens is, say your income is $60,000 a year. That's your gross salary before any deductions, or that's your income. Now everybody gets an amount of $13,808 that they can deduct from that before taxes get calculated. So in other words, you will pay tax only on $60,000 minus $13,808. That's the federal deduction. And then there's a BC deduction or a provincial deduction of 11,302. They call it a personal amount. So you can take that off of your taxes. That will always be tax-free. You report it, but you're not going to pay taxes on it. When you calculate the amount that you're going to be paying tax on, you get to remove that. So in other words, it becomes less. And for that reason, I brought it in. There's three such amounts. There's the personal amount for provincial tax, there's the personal amount for federal tax, and then there's another one called Canada employment amount. So everybody that works in Canada gets the Canada employment amount, and you can deduct that. It's an amount of $1,257 that you can deduct from your taxable income before you pay taxes. And the reason for that is they say that, maybe you need a uniform, maybe you have to have internet at home, or, it's just for general kind of expenses during the year that you have to go on to actually do your work. So before we dig into the spreadsheet that I created, what I wanted to do is I just want to tell you something, and that's the reason why I'm doing this video. I love understanding things like this. And, I was looking at it, and then I looked at the tax return that my accountant submitted last year, and I realized that, man, I left so much money on the table for a number of reasons. Number one, the accountant charged me and Belinda $600 between the two of us to submit our tax returns. So that's $600 because it's really easy to do it yourself. It's a bit of work and you need to understand it, but it's not that hard. And then I look through my tax return and I see that there's a bunch of things that I could have claimed that could have been deducted from my taxable income that the accountant never asked me for. Contact lenses, glasses, any corrective eyesight things can be claimed as medical expenses. Only a portion of it though, but the reality is we bought Connor's contact lenses, which cost like $3,000 last year to correct his vision, those night lenses. And that was never deducted. We never got told about that, so we never added it, and it was never deducted from our taxes. Now, also understanding that because we've got a progressive tax system, so if we manage to deduct even $1,000 from that $3,000 from our taxable income, you are deducting from the high end of the taxable income. So you are deducting on the high end of the taxes. Now, if we manage to deduct $1,000 from there, it would have been roughly at around our, probably around 22% tax level. So that's $220 we could have saved on taxes. So it might sound stupid, that small amounts, but because you are deducting from the high end of the tax table, every amount that you can deduct actually puts more money in your pocket, a significant amount of money more in your pocket. All right, so let's go through this. Let me explain how it works, or how my spreadsheet works. So this spreadsheet only shows the tax brackets in Canada plus those three set amounts that everybody can deduct. The first one is the 11,302 that you can deduct from your provincial tax. So up to 11,302, the tax bracket is actually 5.06%, but because you can deduct the 11,000, you're not going to pay tax on the first 11,302. There's going to be no provincial tax. From there, you will be paying 5.06% on all income up till $43,070. Okay. Anything between between 11,302 and 43,070, you will be paying 5.06%. On the federal side, you will be, obviously 11,302 will still be zero. 13,808, that's the personal amount for federal taxes. There you will still be paying zero. And then they add that Canada employment amount, which takes you up to 15,065. So for the first 15,065 of your income, you will be paying no tax because of those amounts that gets deducted. From there up to $49,020, you will be paying 15% tax. I will put this on the spreadsheet on my on the South Africans in Vancouver website page, so you can go and have a look at it there if you want to see how it works. Maybe we'll build a tax calculator or put some links to tax calculators in there too. The next thing is, from there you start paying tax on everything. So if you look at this, you'll see that at $49,000, which I guess is kind of around just a little bit lower than, that's the bottom end of salaries. If you've got a job like a office administrator or wherever you're working full-time, I would guess that around here about 49,000 is the bottom end of income. You probably won't earn a lot less than that for a full-time job. So if you earn $49,020 before adding any other claims like medical claims, you can claim for working from home, you can claim for, there's just a lot of things that you can claim for that you can use to deduct your salary, to decrease your salary and pay less tax. You will be paying $7,158.86 in tax, which makes it an effective tax rate of about 14.6%. You will clear $41,860. If you get to the higher salary, so $86,000, $86,000 is a very decent salary. That puts that's around $7,000 a month. That puts you, wow, that's actually a little bit more than that. Yeah, well, 7 times 10 is 70, it's 84. Yeah, so it's just over $7,000 a month. Now, if you earn over $7,000 a month, you can live fairly comfortable in Vancouver, I believe. And that would put you on a total tax rate of 28.2%, but actually an effective tax rate of 20.46. So you'll be clearing $68,514 a month. And once again, like I said, this is before all of the other deductions. So yes, when you go to the higher income side, if you earn $500,000 a month, or $500,000 a year, not a month, sorry. If you earn $500,000 a year, you're going to be paying 42% of your money over to tax, which is, a big chunk if you're rich. But for the average guy, I don't know that these tax rates are so crazy. In South Africa, I think they start at 18% and they go up to 42%. But once again, it's also a staggered system. So there's also, I guess, a lot of deductions. In any case, so this is the tax rates in Vancouver. That gives you an indication of how much you will be paying for tax in the different brackets. And then, of course, like I said, the reality is that there's a lot of deductions. One of the other deductions that's straight from here that will immediately make your income less is your CCP or your Canada pension plan. Because that also gets deducted from your income before your tax gets calculated. Medical expenses, you can work from home expenses. There is a lot of those. But what we will do is, in any case, the tax period actually starts, I think, on early February or in February sometime in 2023. They make the new tax forms available and you can go online and download your tax packet. And then you've got a number of ways to complete it. You can either fill it out yourself using Net something, or you can have a paper form which you can fill out and mail in, or there's a lot of the accounting softwares that connects directly to the tax system, so you can fill it out on there. They ask you all the questions, you complete it, and you can submit your own taxes. It's actually really important that you submit your own taxes, even if you're an employee, a salaried employee. You know, I oftentimes think that in South Africa, what we used to do when I did work is like, you know, the company takes the tax off and pays it over to the government, so I didn't care too much. But you actually leave a lot of money on the table if you do that. What you need to do is you do need to submit your tax return, because you will get a refund if you do it right. You're going to go through all of the deductions. Actually, what the accountant was telling me, that in Canada, a lot of the payroll systems deduct a little bit more than from the company payrolls, deduct a little bit more than they should and pay a little bit more than they should over to the government, because obviously they're trying to err on the side of caution. You know, they don't want to have a situation where they deducted too little and then the company needs to come after you and pull some more money back from you. This way, if there's they'd rather have you get a refund, because also when you get a refund, it's always nice to get money back from the tax system. So in February, when this comes through, I'm going to go in depth into this whole thing, and I'm going to fill out my own tax form, and I'm going to make sure that I look at every possible deduction that there is over a period of time, and I'm going to video record it so that if you want to, you can follow along and fill out your tax form. Let's do it. In any case, just once again, I'm not a tax consultant. I'm just a guy that's trying to save money and to make as much, to you know, not waste money, to save as much as possible. All right, folks, you'll have a good one. Cheers.